Hey, this is Zak Mir with the bonfire edition of the Bulletin Board Heroes here at Vox Markets. And first off, we're looking at BT, which is sort of outside the normal pay grade of the Bulletin Board Heroes, but worth looking at the stock for, or the chart for a couple of reasons. One is the gap down that we had in October and gap higher through that resistance line from June, so that's an island reversal. We're also had an end-of-day close above the top of the gap yesterday, so above £1.56. So it's a classic technical or charting setup. I'm not sure whether the shares could actually get up to £2.60 even if they were taken over, but I would have thought the next level up here is towards the old gap there from the end of July around £1.78, £1.80. That could be achieved even if the speculation in the stock amounts to nothing. As far as the stop loss is concerned, if you can risk down to £1.53 in the 50-day moving average, that may be a thing to do. Otherwise, just watching to see whether the shares can maintain above the 156 gap top that we had there from last month. Time frame on the upside, probably the next 2 to 4 weeks in the £1.80 range. Onto a stock which doesn't get much airtime here, but here it is today, C4X Discovery. Here we've got a clear trendline break that we've had just over the last few days, earlier this week, and then break above the 50-day moving average at 30 pence, above that initial target, the 200-day line at 35, and then hopefully retesting the highs by the end of the year, April-May resistance around 45. So 35 and 45 on the horizon for C4X if we can remain above 30 pence. On to Capital Metals, which is a requested stock, and here the situation is that we broke the downtrend there at the end of August, broke that resistance line there from January, around 10.5 pence, sideways shuffle since then, but reasonable action here at and just around the 50-day moving average at 11.4 pence. And while we remain above the floor of the rising trend channel from the end of June, looking towards 14.5 or 15 pence, perhaps as soon as the end of the month. On to another stock, which is a bit of a rarity, Ilika. Here we've had a trendline break there, one from back in April, and the 50-day moving average going as well. That was around £1.30. Above that, looking for or hoping for the shares to fill the gap, the July gap down. That's up to £1.95, in fact, but the initial target may be there towards the 200-day moving average of £1.80 by the end of the year. On to a stock which I think I looked at yesterday, actually, but as we're in a bit of a drought in terms of contenders, worth looking at Landore here. Everything really about breaking that old October peak at 27.9 pence. We're looking for a weekly close above that. Initial target, obviously, and initial resistance, the 200-day moving average at 30 pence. But fans of the shares looking towards 42 pence in that resistance line there from January. That would be very pleasant indeed, maybe over the next 1 to 2 months. Stop loss at the moment back below the 50-day line at 24, if you can afford that. Onto a stock which I've enjoyed over the last few weeks since Luke Johnson turned up. Here we've got Marechale rising since the gap higher that we had at the beginning of last month. Golden cross after that between the 50 and 200-day moving averages at 3.3 pence. Pull back from the peak there near 5 pence, but especially while we're above that old September peak at 3.68 pence, looking for a retest of the 5 pence area and then up to 8 pence maybe over the next couple of months, so maybe the going into December or early January, something like that. On to a stock which has started to rehabilitate itself, NetScientific. I think there was some news earlier this week. Can't remember that far back now, but something like that. Good support here for the shares above the 200-day moving average at 89. A bear trap rebound just below the October floor there at 94 pence, so that's a positive, and we've flicked higher since then. So that should be enough to give us a target back into the 130s, perhaps by the end of the month. Stop loss and end of day close back below the 200-day line, currently just above 90 pence. On to a stock which I saw a bit of a buzz about yesterday on Twitter. We got Ovoca Bio. Here we already had the trend line break for the shares. That happened in August, and it's obviously not the most exciting stock in terms of the price action, but you can see that if I go back a bit further, we've got a rising trend channel there from back in the early part of last year, so that top of that heading towards 21, 22 pence. While we're above the 200-day moving average at 11 pence, we're looking towards the 20 pence plus area, perhaps by the turn of the year. So shaping up, finally, if you like, a slow burn situation, shaping up reasonably well at Ovoca. On to President, which has started to come to life as well in the recent past. Here we can see that shares just gapping through that resistance line there from the beginning of May, which is normally a positive sign. Probably all that's missing now is an end of a weekly close above 2.1 pence and that resistance line and the 200-day moving average. If we can get that, then we could be on the road towards 2.8 pence, retesting this year's high, perhaps as soon as the end of the year. On to quantum blockchain, which has captured my imagination, maybe one or two other people as well. Here you can see that shares in this basically what looks like a mid-move consolidation. Good support for the shares above old resistance on the way up, so above the 2.5 pence level, and obviously well above the 1.7, 1.8 area, which was the summer resistance for the shares. Expecting this mid-move consolidation to end in a move up towards 5.5 pence on the top of that rising trend channel, perhaps as soon as the end of the year. Stop loss at this stage and end of day close back below 2.5. If you can manage that. We've also had this week the glory of a golden cross between the 50 and 200-day moving averages, which can sometimes have follow-on positive price action. Finishing off with Velocys, and here we see that shares are trying to make good on the recent recovery they had. I suppose the key area here is the old May-June resistance around 6.4 pence. We have a weekly close above that, then we hopefully are looking towards 8 pence, maybe as soon as the end of the month and hopefully by the end of the year. Only back below the 50-day line at 5.6 pence, really delaying the upside scenario. That's it from me today. More updates, or an update over the weekend.